Hello everyone. In today's video, I'll be breaking down what my thoughts are on crypto right now and what I think it will do in 2026. First thing I want to talk about is the prices of crypto. Right now, Bitcoin is hovering at about 70K after falling majorly from its all-time high, and same thing with Ethereum falling all the way from 5,000 to about 2,000 where we are at right now. If we take a look at crypto's total market cap, we can see that it has fell drastically, and it is down about 44% from its all-time highs, where it was at $4.2 trillion. Now, let's talk about why. We had that massive run-up in 2024 and 2025 thanks to spot ETFs, but then 2025 got messy with macro uncertainty, higher rates for longer, and some geopolitical noise. A lot of altcoins got absolutely wrecked, and they're down 40 to 60% from their peaks. But let's talk about the reasons why I am still bullish on crypto. The first one that I want to talk about is that regulation is finally coming into the space. First, it started with the Clarity Act, but now it has even gone to the SEC, which literally 2 days ago said that they are issuing a new interpretation of clarifying how crypto assets are going to be. In this article, you can see that Paul Atkins, who is the SEC chairman, says that cryptos are no longer going to be viewed as just, like kind of scam things, but instead are going to be digital commodities. As you can see down below, they are going to list many cryptos as digital commodities within the space, which will allow for much more institutional flow into the markets. And not only this, but also they passed the Clarity Act, which gave some more, as you know, clarity to how crypto is going to be in the future. And just what I expect is I expect bipartisan crypto market structure legislation to actually pass in the US this year. That means clear rules for stablecoins, DeFi, and tokenized assets. And when Wall Street gets regulatory clarity, they pour their money in and not dip out of it. The second reason I want to talk about is the tokenization of real-world assets. We're talking trillions of dollars in bonds, real estate, private equity, and even stocks moving on-chain in 2026. BlackRock, Fidelity, and every major bank are already building this, and stablecoins are becoming the internet's dollar. I think that this total stablecoin supply hits over $1 trillion this year. So if you take a look at, if you don't already know what tokenization is, basically, tokenization is where you use a blockchain ecosystem and crypto tokens to digitalize what they call a real-world asset. Robinhood has already used this before in the EU, where they have tokenized things such as OpenAI, private shares, Claude shares, and it can not only be used for just private companies, but can be used for stocks, bonds, everything that I mentioned before. And even on platforms like Hyperliquid, you can now trade multiple assets that are tokenized, such as the S&P 500. You can trade oil, silver, Solana. Well, Solana's a crypto. You can trade the S&P 500, silver. Yeah, so there's so much things that are just tokenized now. It's allowing for things to be traded 24/7. Whether you like that or not is up to you. But yeah, so tokenization has just been used so much more, and it is growing the crypto ecosystem. So my reason number 3 is that institutional money is just getting started. Bitcoin ETFs have already had billions flowing in, and now we're seeing Ethereum ETFs gaining steam and more countries adding Bitcoin to their national reserves. The 4-year cycle isn't dead, it's evolving into a steady institutional super cycle. So if we take a look at this article that was posted recently by Kobayashi Letter, we can see that crypto market momentum has continued to accelerate, and that some crypto ETFs and funds recorded $1.6 billion in inflows last week, the highest since the third week of January, and this now recovers most of the $3.9 billion in outflows from the 5-week selling streak where Bitcoin crashed. So yeah, as you can see, since the start of the Iran war, total crypto ETF assets under management have risen 12 billion or 9.4% to 140 billion. And yeah, as you can see, we have started to flow back in, and instead of these negative withdrawals, it continues to go up. And reason number 4 is the AI and crypto marriage. AI agents, on-chain payments, and decentralized compute are the next big narrative. Projects that combine artificial intelligence with blockchain are already going up 10% or 10x while others die. And my final reason is that macro tailwinds are building. The Fed is expected to cut rates more aggressively than people think, and when liquidity floods back into the market, hopefully within the next year, risk assets like crypto go parabolic. We've seen it in 2023 and 2024, and I think we're about to see it again. So if we take a look at the global M2 money supply, M2 global liquidity index, we can see that although crypto did originally follow things like this when the money was continuing to rise, it has diverged, and I think that if we see more rate cuts, then crypto will continue to go back up. And now let's talk about the risks. With crypto, there's always going to be risks, and the biggest risks I see right now are macro shocks, which means if inflation re-accelerates and the Fed pauses cuts, then crypto will likely fall farther as it will not have as much liquidity. The second thing I want to talk about is regulatory delay or surprise crackdowns in Europe/Asia. China has already banned crypto once, and if more countries continue to ban crypto instead of allowing more legislation towards it, the liquidity may come out and the price will fall with it. And the third, and probably the biggest thing that could happen, is another black swan event. Geopolitics, exchange hack, etc. But with this Iran war, crypto has, through this Iran war, crypto has continued to rise. After the war started on the 28th of Saturday, crypto has risen about 9% since then, and it rose 15% at one point. So even through the war, crypto has still continued to go up, but it's all just about risk sentiment and if people are willing to put their money into risk assets like crypto. If we get a deeper correction, I'm still going to buy the dip under 60K on Bitcoin all day long. And obviously, this is not financial advice. Always do your own research and never invest more than you can afford to lose. But if you were to invest, the best way would probably be through dollar cost averaging into Bitcoin and Ethereum every month. You're really not going to time the bottom, especially in crypto. The second thing I would say is learn about tokenization and stablecoins. That's where the next $1 trillion is coming from. If you want to take a look at one of my previous videos on Circle, which is a stablecoin company, go check that out. But I think that stablecoin companies like Circle will also see a massive run up just because of how big stablecoins are and can be in future society. If you want to use hardware wallets and self-custody, I think that would be good. You shouldn't trust centralized exchanges with everything, especially ones that are kind of shady like Binance, as you never know when they're going to get hacked or what can happen to your money. And honestly, the biggest piece of advice is to stay patient. 2026 could be one where crypto runs up, but it could also be one where crypto falls/consolidates. The best thing to do is just stay patient with your money. If you're trying to see big returns within the next 3 months, then you're probably going to lose it. Crypto is one of those assets where you have to be patient and learn that timing the bottom is almost impossible. I'm more excited about crypto in 2026 than I was in 2024, and I think that we're moving from the Wild West speculative phase into the institutional regulated $1 trillion infrastructure phase. But let me know what you think down below. What do you think of crypto? Is it one of those scam assets, or do you really believe in crypto and think that it is going to come back to its all-time highs? Let me know down below in the comments, guys. Thanks.